NIO stock continues to rise as the electric vehicle maker expands. It appears to have the necessary components to dominate the world's largest market for electric automobiles. Hey there, welcome back to the channel. Based on the analysis 12-month target price of $70, NIO stock only needs to rise 17% in the next year to meet the target. That appears to be a sure bet at the current rate of growth. So the question is, how high can NIO stock go? Is it possible that it will reach $70? Before we go any further, don't forget to give this video a thumbs up and subscribe to the channel if you haven't already. Make sure to set on post notifications so you don't miss a video from us. Okay, let's get started. NIO is a Chinese electric vehicle manufacturer, but there's clearly more to them than that. William Li, a Chinese businessman, launched it in 2014. Following the company's founding, it received funding from big worldwide corporations such as Lenovo, as well as investment institutions such as Sequoia and the Singapore government-owned Temasek. It also offers an attractive product lineup that includes well-received SUVs like the ES6 and ES8. NIO is making a compelling case for becoming a global brand. They have the drive to succeed as well as the financial means to do so. They're producing interesting automobiles and investing in technologies that could have a big impact on how China uses electric vehicles. Only time will tell if they establish a true global presence. NIO stock, according to analysis, has the potential to reach $70, but there's a catch. NIO stockholders will have to wait a while to see that targeted $70 per share figure. First, let's look at why NIO will be such a prominent worldwide EV manufacturer. Only a few competitors in the industry can match the company's technology platform, which allows it to create very high-performance electric vehicles. It's also relying on its battery swapping concept to cut the cost of those electric vehicles. As a result, it's one of the top EV manufacturers in the world at balancing cost and performance for customers. In China, the corporation has already won the battle because the government has stated that it will back NIO's expansion. The journey will be longer and more difficult in North America, but the company has enough technology advantages and strong enough brand recognition to at least partially enter the EV market there. NIO isn't as expansive as some other EV stocks, but its stock still trades at a significant premium to the value of legacy auto businesses. Overall, it has the potential to return considerable amounts of money in the next years, but this is not a given, and investors should be aware of the risks associated with the company. The current valuation reflects the fact that the stock price is leading. NIO is currently worth more than $60 billion, trading just around $40. This is around 40% lower than the valuation shares traded at when they peaked in early 2021, indicating disinterest in EV stocks, as most of NIO's peers, including Tesla, have seen their shares recover as well. However, NIO is valued at roughly the same level as Ford, despite the fact that Ford is currently a much larger firm in terms of revenue and vehicle sales. Is NIO a good long-term stock? The analysis community presently forecasts a 130% revenue gain this year, implying that NIO will produce revenue growth of more than 100% on the strength of significant deliveries growth. Following a tremendous 480% revenue surge in the first quarter, NIO expects a growth rate of roughly 110% in quarter 2. As a result, it's expanding faster than the EV market as a whole, as well as peers like Tesla, which is predicted to grow by 50% to 60% this year, according to the analysis community, which is approximately half the rate that NIO is expected to grow this year. Of course, maintaining 100% plus growth definitely is impossible, and NIO's growth will slow in the coming years. However, because its products are well received in its home market and the business is also planning a major entry into the large European EV market, NIO should continue to grow rapidly in the coming years. However, obvious growth forecasts for a firm or even an industry do not always imply big share price gains. Investors should keep in mind that NIO, like all automakers, will operate in the cyclical, capital-intensive business with low profitability on average. This isn't to say that NIO doesn't have long-term potential. Nevertheless, despite the fact that EV sales are rapidly increasing, investors should keep in mind that a home run isn't assured when investing in NIO or other EV stocks. After the EV maker's executive announced that its order book had exceeded 10,000 for several months, Deutsche Bank Analysis Edison Yu's team raised their price objective on NIO. Yu's team boosted its price objective on NIO by $10 to $70 in a research note delivered to investors while retaining a buy rating. NIO announced that it supplied 3,667 vehicles in October, down 27% from the previous month, and 65.5% from September. Chen Li-hong, the company's co-founder and president, stated in an interview that NIO's facility in Hefei was only at full capacity for 10 days in October, resulting in decreased deliveries, but sales were good and set a new high. It's clearly over 10,000, and we've been over 10,000 for several months in a row, Chen added, declining to provide the exact number of new orders. According to Yu's team, NIO's delivery prediction for next year has been raised from 150,000 to 160,000, and for 2023 from 245,000 to 285,000. The team boosted its price estimate on NIO by $10 to $70 based on 8 times 2023 EV sales and current delivery forecast. Meanwhile, Yu's team increased the prediction for NIO deliveries in 2025 from 465 to 750,000, assuming 7 to 8 models, with Europe and mass-market brand contributions. NIO aims to double shift its existing factory to 300,000 capacity in the first half of next year, and its NIO Park plant will bring another 300,000 capacity online in the second half of next year, giving the business a total nominal capacity of 600,000 by the end of the year. And its European development ambitions are also on track, with mass-market brands arriving sooner rather than later. In the third quarter, Yu's team anticipates NIO to generate RMB 9.33 billion in sales, with a gross margin of 17% and a vehicle margin of 18.6%, meaning an EPS of RMB -0.82. In the second quarter, NIO reported revenue of RMB 8.45 billion, with a gross margin of 18.6% and a vehicle margin of 20.3%, with the October downtime leaving monthly deliveries at only 3,667 units. Yu's team expects NIO management to issue guidance of 24,000 to 25,000 units for quarter 4 delivery. However, the company's management stated that it added more than 10,000 orders in October and has done so for several months in a row, implying that Yu's team expects sequential monthly sales to exceed 10,000. The team predicts NIO management's fourth quarter revenue projection to be in the RMB 9.5 billion to RMB 10 billion range. Where will NIO stock be in the coming years? According to most forecasts, NIO's revenues will increase by more than 100% this year, but growth expectations beyond that point are far more variable. For example, analysis consensus for NIO's revenue in 2022 is $8.7 billion, representing a 78% growth over the average of 2021. Expert predictions for revenue in 2022 range from $7.3 billion to $11.9 billion, according to analysis estimates. In other words, the most positive projections show NIO generating 60% more income than most negative projections. This large disparity demonstrates how difficult it is to project specific revenue or earnings statistics for a company like NIO, especially when these estimates are for 2022, just 1 year ahead. Okay, so that's it for today's video. We hope to see you in our upcoming video. Until then, if you found this video helpful, please like it, subscribe to the channel, and turn on the bell notification so you don't miss any future updates from us. Also, don't forget to leave a comment in the comment section. Thank you for watching.